Let's talk about the markets in 3 minutes and focus on that mismatch between where financials take us and where tech takes us. Thinking about financials, I mean, how do you view what we know at the moment about the regional banks? Is this just very idiosyncratic, very ring-fenced around one particular business for you, or does it have, as we were discussing with Janet, that broader impact?
It definitely has a broader market impact, but it's how material that is and exactly what kind of lag where we're going to feel that. So yes, this whole stress in the banking sector in the US it is a form of tightening. It is going to make it more expensive for lending. It's going to make it harder to access lending, and that will slow down the US economy. So a US recession that was already likely in the second half of this year is even more likely, and that's why we're kind of seeing that narrative in the market. However, I do kind of, I should say, I don't buy into the more aggressive or more doom-mongery projections out there of the banking turmoil. We're not in a major crisis here, and we've got to remember that banks going bankrupt in the US is a very regular occurrence. There have been way more than 500 banks go bankrupt already this century, i.e. in the last 23 years, not in the last 100 years, which means, you know, it's overall a regular occurrence. On average, we see, you know, a couple of banks go bankrupt every month. Now, obviously, it's spotty and intermittent, and most of them are in the wake of the GFC, but we shouldn't be shocked by some banks going down. Yes, there are big ones, but the really, really big ones are safe.
And we balance that with optimism coming from the tech sector. But even there's a nuance, isn't there? Because it's not necessarily very, you know, there's not necessarily a great deal of breadth to the strength that we've seen from tech stocks recently.
Yeah, mega tech is really outperforming here. It is this kind of quality. It is those names that have great cash flows. And I think that makes sense. Of course, they are relevant enough that they are kind of dragging up the whole broader tech index. And something I'm probably going to hopefully get a chance to revisit later on the show is this outperformance of NASDAQ versus S&P 500. But of course, equal weighted, as you point out, Anna, we're not seeing that breadth. I do think that this you need to distinguish very clearly between the broader tech view versus mega tech. And mega tech might drive the broader index, but that does not mean that tech is generally doing well. It's the same way you need to distinguish between Hong Kong tech and the China reopening trade.
Yes, and the way that European tech is very different. We saw that underperform yesterday, didn't we? Much more focused on chips and the like. Let me ask you about the debt ceiling briefly, Mark, if that's possible. I mean, we've seen, of course, the Republican plan passing in the House. It doesn't stand much chance elsewhere, and certainly the Democrats won't like it. So what does this add to our understanding? So
I think it's interesting we got it passed with only 3 members of the Republican Party not supporting it. That shows that there's at least they've got a strong stance for negotiating, which helps the situation. The other thing is we're expecting the Treasury to give their new official X date very soon, maybe later this week, early next week, and that's likely to be late July.